Welcome back, traders and investors. We have a very special guest on today, Andrew Keene from Keene on the Market. Andrew, how you doing today?
The market's down a little bit, but my the way I trade is very stock specific. I have a stock that's up over $9 this morning that I'm long calls in, so that's good to start the morning with. Another stock that got upgraded this morning, but in
What
general,
stock?
I've been
What
long
stock's
the
that?
market.
What stock's that?
VEAV got upgraded from aerospace stock. We've seen, I trade a little bit differently than most people. I watch institutional order flow, which is orders from the hedge funds, pension funds, and we saw a big institutional buyer of BEAV May 90 calls last week. The stock was trading around $88 at the time, and now the stock is coincidentally trading up to $98. So, does someone know? Does someone know something somewhere? Possible. But when I trade it, it's all in public information because I'm just mimicking their paper. So that's a good start for the morning.
Okay, so do you have I mean, you bought some calls. Did you go into money? Did you put a call spread on? How did you approach it?
Yeah, I mean, it just depends on what they are. A lot of times I just mimic the same order as them. So I actually saw the May 90 calls being bought last week, and they paid 90 cents for these. So I bought these at 90 cents. Let me see what date I bought these on. I bought these on last Wednesday for 90 cents. They bought over 3,000 of these for 70 cents. Now they're going to be worth over $8. So they were out of the money at the time. I pieced out of it. I only bought a 20 lot of them. I was risking about $2,000 on the trade, and I already pieced out and hit three targets. And they are aggressively buying them again on Friday for $1.40. So maybe there's pending news, maybe someone knew some news, and then I'll piece out of my position today. So I'll take off the whole position today.
Do you sell any stock against it, or you just exit the outright options? Because sometimes you can maybe short the stock, offset the position, and maybe trade it a little bit intraday. Or this one, you're just going to try and ring the cash register.
Yeah, I mean, that's a great point. And, the one thing about stocks versus options, the option market doesn't open until 8:30 today. So if I wanted to take my profits right now, if I'm watching the stock trade right now, it's 98.25 and 98.50. So I could just sell the stock against my calls. I have five options left. I had 20 of them. So that gives me the right but not obligation to own 500 shares of stock. So in theory, I could sell 500 shares of stock against my position. I will just hold them to the opening. Doesn't look like the stock's selling off. When I woke up this morning, it was trading like 95, and now it's trading 98.5. So that's a great point, and that's one of the things that I can do in stock. The stock opens, I think, 5:30 a.m. Central Standard Time, and it closes at 7 p.m. So you don't get these instances where you see a stock gapping a lot unless it's an earnings thing very often. But, that's a great point. I could, if I wanted to. Since I have such a small position on, I'll just hold it and just sell them on the open.
And do you use the pre-market parameters at all for guidelines in the stock? I kind of, just for example, Twitter last week really got beat up in the after hours session. Do you we use that as a parameter? Let's say it goes gets back up to that 98. Let's see what the high's been, 98.69. Do you use that as a parameter, or do you look for size orders? I mean, this thing doesn't trade a whole lot. So what would you use? Do you use the pre-market levels? Or are you trying to identify size sellers?
Yeah, I mean, it just kind of depends on the stock. Like this one is pretty thinly traded.
Hmm.
Something like Twitter. I had a Twitter position on. I was short Twitter. I had a put butterfly on for earnings, and it actually sold off to the level I wanted to. It got under $37, and then it reversed. So I haven't seen how much BEAV was. I only think it's traded about 600,000 shares today, and it only trades about 800,000 in a day. So today's going to be a very, very heavy volume day in BEAV. It's traded almost how much it trades in a day. But, pre-market is very thinly traded. Like if I look at it right now, it's 500 shares by 100, and it's 32 cents wide. So I do use the pre-market to try to gauge. I do day trade Facebook, Tesla, Twitter, Apple, and I use the pre-market for that as well. So, when it's stock-based news like this, you can definitely use the pre-market highs or lows, try to capture that.
Yeah, and Brent just put in there that they're going to explore strategic alternatives. And you had that person make. You said that they made that move on what day last week? Last
I
Wednesday.
just brought it up right now. A trader bought 3,206 BEAV May 90 calls for
Wow.
70 cents last Wednesday,
Oh.
and the stock was 87.66. So, it's just kind of a coincidence against this guy's he risked about $200,000 and he's going to profit about, we never know a trader's stock position on, so I try to, calls are bought for one or two reasons. We talked about this last time in the show. Calls are bought either speculation of upside or hedge against a short stock position. So I try to find a one better speculative. So this guy, he's risking about $200,000 and his trade's going to profit about $2 million.
Wow, what a trade. So, okay, so I know you're looking for unusual option activity that keyed you off to your position in BEAV. So it's much harder to do it in the broader market here. But what are you seeing? I mean, just, what's your overall feeling? We got the pop off the number on Friday. We didn't get the follow through. Now we're trading at some, I call it very critical support. I was trying to stay bullish above this 1865 level. You had a couple lows there. Now you're taking it out in the pre-market. Now Dennis is looking for a little pop to sell into strength here. Is the market going to give you a chance?
If you think about it, there's two kinds of markets. There's trading range markets and a trending market, and we're almost in a trading range market where we can't really get, we had that nice jobs number, or what we thought was a nice jobs number. We used to think that bad economic data was good because that means the government's going to pump our money in here. Now good economic data is actually bad. So we've been between, 1810 and 1890 in the futures, all the way almost since February. So that's a pretty tight trading range, but we are still in a raging bull market. There's three ways to play a raging bull market: aggressively long, moderately long, and flat. There's no short setups, I don't think, here. I can't get short the market until we break under 1,800 in the S&P 500 futures. So we are still in the bull market. We talk about the Ichimoku cloud. It's been under the Ichimoku cloud, which is my favorite number one technical indicator, for 12 days in the last year and a half. So, we are still in a bull market. But, if you don't like the bull market, I think there's not many setups to set up short. If I was to play to the short side, I would take all these stocks that are making higher highs and higher lows, pick one: LinkedIn, Pandora, unfortunately Google, Facebook. All these stocks with the high growth, there's been a rotation out of these stocks, right? People used to always shift to growth, and they would love these growth names. And no matter what Amazon's PE was, you'd always find buyers. Well, now it's the complete opposite. All the hedge funds want Exxon, they want Chevron, they want COP, and they don't want these high growth names. So if I was to choose to get short something, I would take advantage of the fact that these stocks look technically very weak.
Okay, all right, Todd. So Twitter, you had a butter. Could you explain the trade that you had going into earnings, and what you based it on, and what the actual trade was, and how it worked out for you?
Yeah, basically, I go through a trading plan, and I call it the Him Cribbet trading plan. So basically, I look at something like Twitter, and the first thing I look at is historical movement. Unfortunately, Twitter's only had one quarter of earnings, and it sold off on earnings. Then I looked at the implied movement. The implied movement was about $6, and Twitter was trading around $43.50. So once I have the implied movement of $6, I have two quote-unquote measured move targets. The option market was implying that Twitter would move $6, either up to $49.50 or down to $37.50 between now and the end of the week, right before earnings. So then I just put on a basic risk versus reward setup, knowing that the Twitter sold off last time. I thought Facebook's number was great, and it sold off, and the chart looked weak. So what I did in Twitter is I bought a put butterfly.
Okay.
So basically what I did, I bought the 40 puts, I sold 2 of the 37 puts, and then I bought these 34 puts. You can say it's a put butterfly. You can say I bought a bear put spread to sell a bull put spread. And the reason I sold that 37-34 put spread is that's right where the measure move target was, and got some of my capital back because buying a put spread was just a little bit too much I wanted to risk.
Yep.
So on the trade setup, basically, I was risking $45 to potentially make $255. And I sold it out on Friday because it's just a weekly position for $1.15. So I basically tripled my money in the course of 3 trading days. So it worked out pretty well. It would have been much better at 37, but a winner is a winner. And now I don't have anything on Twitter. I will look to trade Twitter today as a day trade, but I do not have a position on right now.
Okay, and you'll for a day trade, do you like to go in with something right off the open, or do you let it shake out for the first few minutes and then maybe use a breakout from the opening range? I mean, we do have it trading down here in the pre-market. I don't know. Are you a Barron's fan at all? Do you read Barron's, or is it like getting the news after it already happened?
Yeah, it's kind of like getting the news after it happened. I respect their writers and the articles they put out, and it usually affects the stocks that they talk about. Right now, as I look at Twitter, I look at the 5-minute bar using the Ichimoku cloud, and I use the pre-market. And what I see here is it's under the cloud here. I want to see it get into the cloud and break up or down. I'm a breakout trader. Everybody trades differently, and there's no right or wrong way to trade. The right way to trade is someone that makes money. So I am a breakout trader. Some people are pullback traders, aggressive pullback, mild pullback. There's so many different ways to trade, and you can't tell someone right or wrong how to trade if they can consistently make money. But I know I'm a breakout trader. So if I see Twitter get into this zone, it looks like between 38.60 and 38.90. If it sells off, I'll look to get short it. If it breaks 38.90 to the upside, then I'll look to get long it. But I don't have anything on yet, just in Twitter.
Okay, and a lot of people are probably sitting on some nice profits here in Apple. Had the good earnings, had the follow through here, trying to knock on the door on 600. I know this is probably not a great day trading stock for you because it's a higher price maybe after the split. What you got any take on Apple?
I actually got shorted in earnings, so I didn't have a big position on it. I was risking like $800 in the trade. Apple is one thing I looked at, and I looked at the historical movement, and it sold off actually 6 of 8 quarters. I guess they like the news with the higher buyback and the stock split, so the stock popped. I've been saying Apple should split for like 3 years because this is what happened in Baidu, where Baidu split the stock and then the stock doubled in the course of the last year. I think this is what going to happen with Google, and it should happen with Apple. It doesn't change the market valuation of a company, but psychology tells you, oh, now I can buy Apple. It's cheap. It's only going to be $70. Or the same thing in Google. You get the retail investor coming in and saying, wow, the stock for $6,000 and watch 10 shares of stock. That's not exciting. But now you can own 100 shares of stock, or what? 7-to-1 split it.
Okay. All right, Andrew. LinkedIn had some, we thought was decent earnings, got an upgrade, got a pop, and then it had the drop here. Is this something that you're active in at all?
I had a LinkedIn position on. Unfortunately, that one didn't work out either. I was long that one. I thought the earnings were pretty good. Butterfly as well. I think Tesla can get up to 225. LinkedIn now is nothing. There's 2 ways to trade LinkedIn. It's either short or flat. So I am flat right now. LinkedIn, one of these stories where it's making lower lows, lower highs. The chart was very weak. There's no long positions to take.
Okay, and just your final thoughts here on the market. S&P's trading down pretty good in the pre-market, down at 9 points, still hanging at a support level here. So your bullish thesis is probably still intact here. You may be shorting some individual equities, but as far as today goes, you're not looking for a washout. Is there something that could change your mind or change your strategy on that today? Do you have a particular level in the S&Ps, or in the futures, or in the cash, or something before that 1800 level that might get you a little bit more excited about the downside?
Not really. Like I said, I do trade a little bit differently than most people. I trade, institutional order flow, and I trade stock specific. So there's 8,700 stocks stock specific, and today, I already have 2 stocks that are gapping higher, so that's going to work out well. But in the general market, flat or long, I don't think there's any short setups here. If you wanted to aggressively be shorted here with a stop above 1,900 and S&P, that might work. In the last 18 Tuesdays, keep an eye on that as well.
Okay, we've had Andrew Keene from Keene on the Market that looks for his cues in trading from institutional order flow. It's worked out good for him today in Beaver Aerospace, so check out his site. Andrew, thanks for coming on. Have a great day. We hope to speak to you soon.
All right, thanks a lot. Have a great day.